In today's video, we will review consumer price inflation, producer price inflation, what's happening with foreclosures, and most important is what's happening with real estate market in January 2023, west of 41. The neighborhoods that we'll be covering today would be Park Shore area, Moorings, and Naples downtown. My name is Anna Eckstein with Naples Ultimate Luxury Group, MVP Realty. And if you do like to watch more of the videos like this, please subscribe the button below. I will put indexes on breakdown on the subjects that we'll be talking in this video right below this video. So if you watch my video previously, and I was talking about in the video also about the CPI and the PPI, which is consumer and producer price index, you can skip this portion and go to market update for west of 41. All right, thanks so much. Let's start. All right, so let's start with some revision that big banks actually revised the forecast for real estate market for entire country for 2023. You can see that Goldman Sachs actually revised the expectation of declining of 6.1% to declining in a value to 2.6%. Again, it's a nation wide, so we have to review your local real estate market, what's happening in your local real estate market. And we will do that at the end of this video for communities west of 41. So let's take a look. So where are we at with the value? Are we hitting the value bottom? So this is chart indicating what happened in 2022. You can see that middle of the year, we start receiving declining in a home value throughout the country. Again, look at your local market, but I just wanted to share with you the stats. So let's talk about the CPI, Consumer Price Index, the indicated the inflation, as we know that inflation is start going down. The peak was in June, was 9.1% inflation, and you can see that for the months in January, we still experience inflation 6.4%. Market expectation was 6.2%. It did come in hotter than expected. And you can see some of the items were still quite inflated. The food is only come down to 10.1 versus 10.4% inflation. The cost of used cars continue to decline, but not as much. Oh, I'm sorry. It is more compared to the months of December, from minus 8.8 to actually minus 11.6. In a contrast of shelter, you can see it's actually being increased 7.9 versus 7.5. The energy as well increased 8.7. Gasoline prices actually increased by 1.5%, and reversing from declining in December 1.5%. So this is the chart that shows to you the inflation travel for the past 12 months. You can see the peak of the inflation was in June of 2022. This is where we are today. Inflation as a month of January 2023 sits at 6.4%. This is the table of a breakdown of the inflation travel months over months. You can see in percentage. I'm not going to go over this. If you like to pause the video and call the review for yourself, that's the reason why I'm sharing with you this table of the content. The United States inflation month over month increased 0.5%. And if you look at one of my videos previously that I made for the months of December, you can see that this number is actually being revised and being revised higher. So the Federal Reserve revised the at least last quarter for 2022 with different calculations, how they actually calculate the inflation rate. And before revision, that was calculating over a number period of years. And they decided moving forward, including January, that they will be calculating inflation only based on the 12 months of data to be more accurate. And if you would look that the inflation in December, I don't know if you watched Mr. Powell speaking, we was talking about deflation, and well, we are calling the inflation is decreasing, but if you would look my previous video, it's actually a month of December, we had minus 0.1. So we had really started going into really deflation of the inflation, and after revision, it's actually rose 0.1. And you can see that it's rose 0.5 in the month of January. So the core consumer price inflation, that would be excluding volatile items such as food and energy. And you can see it's rose that number as well by 0.4% in the month of January, the month over the months. And year over the year, the forecast actually was 5.5%, 5.5, but it's actually rose by 5.6, again, hotter, and it's exceed market expectation. The producer price index. So this is what producer experience in terms of the inflation. And it's also, you can see that rose to 6%. The market expectation was 5.4%. So the producer is definitely experienced higher inflation. And what they mean to you, what they mean to us is, think about if the producer experienced inflation and months over the months, it's actually market expectation was 0.4%, but in reality come up at 0.7% after deflation in December, right? So what that means to us, if the producer experienced inflation, so happen two things, how they can deal with that. One, they cut that margin, you know, put that in the margin, which is less earnings would be for that producer. And second is they will forward that inflation to the consumer. So I always say if the PPI came in hotter than expected, then the next month the CPI, which is consumer price index, will most likely will go hotter again as well, because the producer most likely will forward that inflation to the consumer. If it's more costly for the producer to produce the goods and services, then the consumer will be experienced the same situation with that. And you can see that the PPI was really coming way hotter than expectation of the market. And you can see that core less food and energy also come in at 5.4%. And you can see months over the months, it's increased by 0.5%. And that's now good from 0.3. So you can see that that inflation start really heating up between consumer and producer. So also was very interesting fact, because it's kind of totally missed market expectation. We added 517,000 jobs in the month of January. This is like, I mean, this is like crazy, because the market expectation was 185,000. This is like double. So it's something that really telling us the economy is just so strong, the labor market is so strong, unemployment rate is also just continue going down. So our December unemployment rate was at 3.5%. The market expectation was 3.6, and we come in at 3.4. This is the lowest for since, actually, it's interesting because this is the lowest since May 1969. Guys, 1969. I mean, this is incredible. And you can see, obviously, it's been the lowest for the past 24 months. I'm sorry, for the past, well, on this 24 months, but for the past 12 months on this chart at least. The retail sales also beat market expectation. Expectation was 1.8% to rose, and rose a jump 3%, and you can see it's the biggest jump for the past 12 months as well. The building permits rose by 0.1%. You can see that on the chart as well, and the mortgage rate actually increased for the first time in 6 weeks to 6.39%. You can see the chart, what the rates was traveling week after week. And the mortgage application sunk to 7.7% by erasing 7.4% from the previous week. And also you can see down the chart, the refinance index sunk by 12.5%. The purchase index sunk by 7.7% as well. And the housing starts fell by 4.5% throughout the country. And at the end of this chart slide, you can see the breakdown by the area. So obviously, you know, if you're looking for more detail what happening in your neighborhood or in your city, obviously this is represent the country, but you can see by regions. Northeast fell by 42.2%, Midwest 25.9%, but South, where we at, Florida, right, is actually rose by 7.3%. So where you live, it matters to your local data. The month after month is fell by 4.5% throughout the country. And interesting survey that I found that 67% Americans said that they're expecting a housing crash within the next 3 years. And by the expectation, you know, if you read in headlines of foreclosure filing surged by 115%, in 2022, you're thinking like, gosh, probably everything is going down on sale by 50% at least, right? But in reality, if you start looking at the data, what is that behind of the 115% that you can, one of the data called Atom, they are leading curator of real estate data nationwide of land and property data. And today released its year-end 2022 U.S. Foreclosure Market Report, which shows foreclosure filings, default notices, schedule action, and bank repossession were reported on 324,237 U.S. properties in 2022. And it's up 115%, which we saw in a headline, from 2021, but down 34% from 2019, before pandemic shook up the market. And foreclosure filings in 2022 were also down by 89% from a peak of nearly 2.9 million filings in 2010. And this is, you can see, kind of breakdown chart, which I thought was quite interesting. From 2005 to 2022, you can see those numbers of filings, and it's really sad to see, because over 324,000 families experienced this horrible situation. But you can see that this is fraction of what filings being filed in 2007, 2008, 2010. You can see in millions. So do I think real estate market will crash to 50% down, or to whatever down is? I don't think so with this number. It's still sad to see that the number is there, but you can compare to the numbers that we had in 2008, 2009, and this chart probably speak, you know, more than any words can say. And I just wanted to share with you from 2017 to 2022, you can see if we take on average 3-year, 2017 to 2019, the average of the foreclosure filings was just shy of 600,000. This is nearly some of the half, or more than half, of the short filings for the past 3 years, since 2020 to 2022. And the reason why, because 18 months after the end of the government foreclosure moratorium, and with less than 5% of the 8.4 borrowers to enter in the CARE Act forbearance program remaining, foreclosure activity remains significantly lower than it was prior to the COVID-19 pandemic. It seems clear the government and mortgage industry efforts during the pandemic, coupled with a strong economy, have helped to prevent millions of necessary foreclosures. So this is, you can see, is from Executive VP of Marketing Intelligence quote. The bottom line is there will be an increase in foreclosure over the next year from the record low levels, but there will not be a surge wave of distressed sales as happened following the housing bubble. The distressed sales during the housing bust led to cascading price declines, and that will not happen this time. This is from Bill McBride, founder of Calculated Risk. So let's talk about local neighborhood data. And we will review the 3 communities that is west of 41. It's Parkshore, Moorings, and downtown Naples. And again, we'll be comparing January 2023 to January 22 and December 22. And also we will be take a look single family homes and the townhouses and condos. So active inventory, what does the active inventory mean? It means that homes that they actually were being active for sale in the month of January in this situation. So if you're a buyer, you definitely would like to see this number plus a higher number. The reason why, because there's more homes to view, there's more homes to shop, there's more homes to choose from. If you're a buyer, if you're a seller, you really have to think about that, you know, who represents your home, how in the best case scenario you can showcase your home to as many people as possible. So with who you work is really matter at the end of the day, because you have way more competition than you had a year ago by 186% if you're the seller and you have a single family home in the Moorings. So if you have a seller and you in a Parkshore, well, you have 263% higher competition than you have a year ago. If you would list it back then. The same concept in December. December is not very alarming to me because December, we have Christmas, we have holidays, so it's not a lot of sellers would consider to put the properties in December. So December naturally should be higher in January when you compare it to December. But if you compare January to January a year ago, that's the number is alarming to me if I'm a seller. If I'm a buyer, wow, this is like really good. So let's move on with a new listings. New listings, how many new listings being added to the month of January? And again, if you're a buyer, the bigger percentage is better because there's more homes to shop and there are more homes to choose. If you're the seller, you definitely have to think about with who you work is really matter at the end of the day to get you the biggest profit and to sell on your home. And you can see that we have in January in Moorings as much as 100% more new listings in the month of January. Again, December would be for me no alarming. You would expect there's more homes will be listed in January compared to December. So, but you can still see, you know, all the numbers is up, are up. All right, so we're going into the supplies of inventory. How many months? So basically, it's how many months will take to the seller to sell the homes in the neighborhood. You can see currently for single family homes, we in Parkshore 9 months worth of inventory, Moorings 10, downtown is 7.9. For the condos, you're a little bit less. You're running anywhere 4.2 to 4% in downtown Naples. Moorings as low as 2.8 months of the inventory on the condos. But you can see that for if you compare January to January, that we definitely added, well, because of the new listings, there's more active listings, new listings coming to the market. So this number would be obviously common sense why we should have the higher number here, because there's more listings added to the market. So there's longer it's take them to sell it. You can see as much in downtown Naples, as much as 225% for single family homes increase with month supply, and as much as 600% increase January to January for a condos in a Parkshore. That's a huge number if you really think about. So if you're a seller, that's, you know, you have 600% more competition now to handle in a month of January 2023. So December, again, you can see across the board pretty much we added in inventory of months of the supply. And if you're going into show per listing, so if you're the seller, you pay attention to these numbers, and you can see that it's interesting because if you look in the chart, like, wow, the Naples, the Park Shore in Naples, we have less showing per listing, but like 75%, and that's a lot. And then you look in a Moorings, it's like, wow, we have 60% more of showings per listing compared to the January of last year. You thinking about these neighborhoods, they're probably like really far away from each other, but they're right next to each other. In reality, you can walk from one neighborhood to another, and that's how close they're located. The downtown Naples is actually located further from the Park Shore than the Moorings. It's quite interesting. The location the same, but the numbers are so different. And this is the showing per listing. So you can see, as you can see, the condo across the board, you can see that definitely by close to 50% on all of them are down show per listings. And in December, you can see there's some quite significantly up. The people was actually showings per listing. You had more compared to January 2023. So if you look in median percentage of last list price, that's your fluctuation of price reductions, things like that. So you can see across the board compared to the January that you have the higher the price reduction, and actually down by as much as 10% in a Park Shore area, and it is up slightly in December comparison to the December. If we look in pending inventory, where is pending inventory? Pending inventory including any listing that went under contract with contingency or without the contingency for the month of January. And we're comparing again to a January. You can see that those properties went under contract significantly reduced by 67% in a Park Shore area, and they are flat in downtown Naples and also Moorings. You can see that condos actually, you have less condos going in pending, as much as 58% in downtown Naples, and they are except the Park Shore actually in December, quite interesting. They mostly actually, well, single family homes, they're kind of down for the December. It's those that went pending, but the condos, they're kind of all up. And in Old Naples, as much as 600%, which is quite interesting numbers. So the median price per square foot, this is median, again, price per square foot reported for the months. So if you're a seller and you try to determine what the price per square feet would be appropriate for your home, this is not the number, honestly, to look for, because we have a variety of type of homes, homes or condos, for that matter of fact, that would affect the value for per square foot. And the reason why, because in the single family homes, we have those ones that on a bay or on a canal, they have access to the Gulf, and those ones they don't. Obviously, the price per square foot will be very different, right? This is just one of the examples, not even including, you know, the upgrades and proximity to the beach. There's so many different factors, right? And the same concept with the condos. There's some condos we have on the beach, some off the beach, Gulf access condos that we have. So if you're the seller, you keep wondering what is the potential listing price or your potential sold price per square foot can be for the property. I would love to give you a detailed market report for your home, so you know exactly what to expect when you list your property. So if you look in a medium sales price, again, I just thought would be something interesting to share with you. But if you're the seller and you would like to have more details, would love to work with you and provide to you that detailed market report. And the dollar volume, and you can see actually the dollar volume increase for across the board for single family homes in the neighborhoods, compare January to January. And you can see the completely decrease if you're the condo owner, and as much as 91%. So what that means that in January 2022, there's way more sold condos than in January of 2023. So closed sales. This is actually the last chart that I would like to share with you, is the properties that closed in the months of January of 2023. And you can see it's just interesting, like it's just interesting because like I'm just looking at Park Shore and Moorings, they're right next to each other, but the number of sales that was closed in January of 2023, it's less by 100% if you compare a year ago. But watch this, if you are a single family home in Moorings, you actually increase that number of sales by 200%. The two neighborhoods right next to each other. Like seriously, it's amazing how just, you know, when you compare data to data, it's interesting. So the buyers definitely chose Moorings in the month of January on the single family homes compared to Park Shore. Don't ask me why, I have no idea. So you can see that condos or townhouses is definitely, you see less sales in January compared to a year ago, as much as 82% in Park Shore. In December, you can see the increase, but you definitely see the decrease in the condos, as much as 75% for the Park Shore. So that means the people less purchase condos in January that they actually close, not when pending close, compared to the December 2022. And that can actually could very be a easy explanation. A lot of people that if the property is pending at the end of the year, a lot of the buyers would make a financial decision for themselves to close in that year, not transfer to the new year if they are pending. So a lot of people would come to before the end of the year to find the property so they can have for a season home to come over and enjoy our beautiful sunshine area, and it's a tax reason, so they can close it up the old books for the old year and have the home for the new 2023. So that's the reason why you see comparison to the December, why the closed sales are so less or more in those reasons so that I just mentioned. So anyway, I just wanted to share with you the information of these beautiful communities west of 41. Well, I hope you find this video helpful and resourceful. And if you do like to see more videos like this, please don't forget to subscribe the button below. And if you're a buyer and you're thinking of purchasing home west of 41 or anywhere in Southwest Florida, I would love to sit down with you and have a conversation where we can create a plan how to achieve your real estate goals in Southwest Florida. And if you're a seller, you're thinking of selling, or just wondering where the value of your property is, I would love to provide to you a comprehensive market analysis on your property, on your home, in your neighborhood. And it's very easy to reach me. I would love to share with you my marketing strategies for your home to showcase your property to as many buyers as possible. And my phone number is 239-249-4476. My name is Anna Eckstein with Naples Ultimate Luxury Group, MVP Realty. And I look forward to the next videos. Thanks so much.